Hi, my name is Rod Cleef, and I'm the host of the Lifetime Cash Flow Through Real Estate Investing podcast. And every week I interview multifamily rock stars, and we talk about how they've built incredible wealth for themselves and their families through multifamily properties. So hit the like and subscribe buttons to get notified every Monday when a new episode comes out. Let's get to it. Welcome to another edition of How to Build a Lifetime Cash Flow Through Real Estate Investing. I'm Rod Cleef, and I am thrilled that you're here. And I know you're going to get value from the gentleman I'm interviewing today. His name is Mark Cira. And Mark is a CPA and has been involved in all sorts of different real estate projects, from mobile home parks to development to multifamily. And we're going to talk about investor relations and raising capital, and who knows where else we'll go today. Mark, welcome to the show, brother.
Hey, thanks a lot. Really happy to be here, Rod.
I'm glad you're here. So why don't you take a minute and give us a little background, do a little better job than that pathetic interview or intro I just gave you. So please tell us a little bit more about who you are and why you're where you are in real estate.
Yeah, I'll kind of take you back to the beginning. I graduated in 2002 with an accounting degree and came out, got my CPA, went into management consulting, worked at Ernst & Young, Navigant Consulting. And along the way, I came across one of my clients that brought me on board over the last 10 years as their CFO. And really, that's been my role today. And how I got into real estate was about halfway through my career. My wife is a general contractor here in Chicago.
Oh, wow.
I met her. We were going to build a house. We ended up buying a piece of land that we didn't build our own house on, but we developed some spec homes on it. Divided the property, went through all the zoning and all that sort of thing. And that really lit the light bulb on real estate for me. It showed me that you didn't have to be an ultra wealthy person to get into real estate. There were regular people out there investing. And so when we did that, we just kept doing it for the next few years. We started to build up a nest egg, and I started to look at other ways to make money in real estate, especially as my career was taking off as a CFO. I was getting busier. I didn't have as much time to be an active investor. And we were involved in a variety of deals at that point, from mobile home parks, like you mentioned, some capital, projects around multifamily, all kinds of different real estate things. We were feeling our way out. And I really got involved in much more passive investing. And that's where I am today, is really focused on that passive investment for people like myself that are busy professionals that maybe don't have the time or energy to get out there and really do all the legwork to investigate sponsors and that sort of thing.
Sure.
So that's how I got involved. And that's our kind of history.
Okay. Well, so, I know before we started recording, we talked about a couple topics that I think we can add value with today. And I guess let's start with, in today's hot market, there's a lot of aggressiveness going on out there. And how do you feel about that? Do you feel like mistakes are being made right now in this hot market? Let's start there.
Sure. And this is a lot of the reason why I'm trying to add value to professionals like myself. I see a lot of deals come across my desk, and there are many new operators out there. As you know, there's a lot of capital in the economy right now. People have a lot of money that they're looking to invest, especially as bonds are not paying anything. So people are looking for yield as well. And so this money is coming in, looking to new investors who are popping up, and a lot of them are underwriting projects more and more aggressively for a number of reasons. Either they have to outbid operators who are already entrenched in those markets, have deep relationships. The brokers know they're going to close on the deal, so a new operator's really got to show their capability, and they may overbid. They may underwrite rent increases.
May is the wrong word. May is the wrong word. They are definitely
I'm being soft here.
Yeah, sorry, I interrupted. Yeah. But okay.
So all of those things, you look at the underwriting and you see expenses that are underestimated, build outs that are underestimated, rents that are increasing at 5 or 10% for the next 5 years, which, maybe that was an anomaly last year, but is that going to continue throughout the whole period? And these are the things that until you really start to understand these operators and how they look at a project and how they're winning, what they're doing. You know, you really want to be careful.
Yeah, no question. And you know, we get into the best and final. For those of you who don't know what that means, it just means, you know, it's almost like a bidding process. And we get into, you know, that best and final. And when we see what a property ultimately trades for or sells for, it just, we're, you know, blown away. It's like, do they even have any cost of funds? You know, how are they coming up with these numbers? And, you know, there's a big operator, very well known. I'm not going to say his name, but anybody would recognize it out of Miami. That, you know, I saw one of his packages, and he buys A-class assets, and he was showing a 10% rent growth a year for the next 5 years. And I'm like, you know, listen, that'd be awesome. I think Florida is going to explode. I really believe Florida is going to explode and continue to explode. But boy, that is super aggressive. And
Exactly.
Anyway, so how do you, you know, how do you think about investing when, you know, the market is so hot and, you know, we're seeing incredible rent increases? I mean, just like I think it was Tampa was 24% or some crazy number in 12 months. You know, how do you, you know, what do you think about it?
Well, it's hard to take all of your money off the table and just wait, right? That's not a great strategy. So it's obvious that you need to be investing, but investing carefully. And I look at that as investing with operators that have been around for a very long time, who, you know, have those deep connections to both their markets and can get deals at favorable rates or prices.
Terms.
Yeah, favorable terms. They've got long relationships with contractors, you know, vendors, and especially their lending partners. Because if things do go wrong, you want to know that they have the staying power and that they can work with their lenders. They can find the capital to withstand a downturn. And, you know, a lot of those operators that have been around for a long time have that ability. And so I think of things in diversification and staying power, because as you know, real estate's a long-term game, right? We're not trying to turn something necessarily in 2 or 3 years. I think those are usually the high-risk projects that may end up in failure if things go wrong or poorly. Right. I'm not saying that there isn't any room for that in your portfolio, but I like to have a section of my portfolio that's focused on these diversified assets and longer-term operators that have that staying power.
Yeah. Now I know you do a lot of focus on investor, you know, raising capital and investor relations, and you're doing a fund of funds, and which is basically where you create a fund to put money into somebody else's deal. And what do you do to build relationships with new investors and nurture those relationships? Because I know, and in fact, before we go there, you know, you're a CPA, and I get a lot of clients that are in accounting. And I mean, when I say clients, I mean students that are in accounting, or they're in IT, or they're in engineering, or, you know, so on and so forth. They're very introverted, and I have to pull them out of their shell because this business is a team sport. Can you speak to how you overcame? Because I know you mentioned you were introverted before we started recording.
Absolutely.
Can you speak to what you did to overcome that and push through it?
Sure. This is not natural for me. I'm not one that likes to put myself out on the public, you know, in front of public and speaking and all of that sort of thing. So this is unnatural. And the way that I got over it is that you kind of just got to realize that you're not going to be everything to everyone. You know, I may not be the personality for every person out there, but I don't have to be, right? There are people like me who understand my personality and my, you know, like for spreadsheets and numbers. There's another person out there that is, you know, excited about marketing and getting the word out. And that is a room for growth for me, or in the future, as our firm, you know, grows, finding other people, you know, the who, not how, to do more of that legwork. So it's a combination of things. It's having a team that helps push you in that direction, you know, to get out there and talk about what you do, finding mentors that'll help you, guide you through finding your voice, and talking about what you know and realizing that you have value to add. Having confidence in what you know and what you speak, and really just kind of getting over it, right, Rod? You've got to believe in yourself.
No, that's the bottom line, and recognize, a lot of people fear rejection. They fear me. I mean, that was huge for me. I had, all these childhood things happen to me that caused me to believe I might not be good enough. And so, I was embarrassed to raise my hand in class for fear of being embarrassed or humiliated, and just afraid of rejection, and ultimately fear of failure as well. And, so many people have these limiting belief systems, and, there's a reason that the acronym for belief systems is BS, because they are 99% BS, but they hold people back, and they do throughout some people's complete lives. And so, you are an anomaly in that fact, Mark, that you're able to push through that, because my wife is introverted, and like she could spend all day in her freaking closet and be happy as heck being left alone, just to piddle or do whatever she does. And so it's tough for her to, get out and meet people and so on. And it was for me initially as well. But, I think one of the things you said is around confidence. And I really believe that, what I tell people is you build your competence so that you feel like you really have an idea of what you're talking about, and that'll equate to your confidence. And then, if you push yourself, even if you're introverted, then you'll have the ability to influence people. And, and I think that's kind of a progression there, but it starts with competence. Otherwise,
you have to accept who you are and what your strong suits are. Right.
Right.
You don't want to try to mold yourself into somebody that you're not. Because then you will never be confident in that person, and you need to get out there and speak to what you know.
Right. Well, some of the best partnerships I see, and the reason I wanted to ask you this, some of the best partnerships I see are somebody that's analytical and introverted like yourself with someone else that's like a mouthpiece, like I've become now, and that's my partnership. I've got a partner that's super analytical. And so, and the previous one was a CPA and super analytical as well. And so, it works really well. But you're wearing both hats, and that's why I thought it'd be interesting to chat with you about it, because I
think it is important to know your lane, but to get comfortable and be out there. People still should know who you are. Even if I did have another partner who was more outgoing, they may do the majority of things. But I think even when I do due diligence on partners, I want to know all of the partners, not just the guy that's selling me the product or the next deal.
Yeah. Yeah. By the way, guys, I've got a couple of free resources here I'll mention to you. One is around partnerships, because so many partnerships fail. And hang on, I gotta take a quick look at what the text is. But if you text, I think it might just be the word partner. Hang on one second, to 72345. Remember that number, 72345. I know it's not partner, it's partnership. Text the word partnership. And I've got this book that's got, loads of questions you should ask a potential partner before, you get into a partnership, because a partnership, like a marriage, is easy to get into and hard to get out of. And then another resource that I'll mention real quick is, you talked about really checking out an operator before you invest in a deal, and really, you like long-term investors, which I agree with, and people that have gone full cycle on deals and know, are well entrenched in a market or submarket. And I've got a list of questions you should ask a general partner before you invest in a deal. It's great for a passive investor, and you text GP questions to 72345, and so that you're asking, you don't get caught up in the emotion of a deal. You really dig in to see what the person is all about and get to know them. So what do you do to maintain, once you're out there, I guess you're out there doing podcasts. What are the sorts of things do you do to meet people to, to approach them around maybe investing in deals that you find? What sorts of things do you do?
Sure. I mean, a lot of the things that you probably do, which is outreach, I have blogs as well. We go to conferences.
Okay.
It's all about that investor relations, right. Which I got to be honest, that coming from my perspective as an analytical person doesn't seem natural to me. To me, it's like, if the dollars are there, it's going to attract the right people. But if people don't know about you, they're never going to invest in your products, right?
Well, so let's be specific. So do you do educational pieces? Do you go to conferences, you meet people, you shake hands? That's the best way. Networking, like, that's the best way. But do you do anything to create reach? Do you have your own meetup, or do you just speak at other people's? Tell me a little more.
Mostly speaking at other people's at this point. I do not have
Okay.
my own meetup. We do have educational resources on our website as well. So very similar to what you just mentioned around due diligence packages and underwriting, things like that. So we do focus on educating our customer clients as you may refer.
Which everybody does. I mean, that's you got to do that. The more you do of that, I mean, we really are in an education-based marketing, environment right now. It used to be you could just market, but the smart people educate and
I think that's the first step in getting to know your clients and getting comfort with your clients is educating them, because many of them, as we know, are new to real estate. I think this is an expanding investment arena, and many investors are only now discovering real estate as an option, as an accredited investor. And many of them are venturing out here for the first time. And so you want to help them understand, obviously, what they're investing in and the options that are out there and how to do it safely and effectively, and not to get too excited too fast and just start jumping at the first deals, because those are the mistakes that you hear all the time. I found the first operator that I came across. I invested 50 or 100,000 and the deal didn't go well. Well, all of the red flags were there and I just didn't see them. That happens all the time.
Yeah, it does. And that's one of the reasons I also mentioned, let me mention this, I'll do a little plug. I've got an event coming up, the end of July, the 3-day boot camp. And even if you're going to invest passively, frankly, you should come, because why would you give your hard-earned money to someone if you don't have a real good understanding of what it is? I mean, that applies for the stock market, that applies to, investing in businesses and, bonds, whatever. You should have some basic understanding. Otherwise, you're just dealing with a broker, which is really a glorified salesperson, trying to sell you on something. And so, if you are interested in investing passively, come to my boot camp and learn. And by the way, there'll also, of course, be scores of operators there, and you can really get to break bread with some of these people and get to know them and trust your gut. Your gut's super powerful as well. I know that sounds real simplistic, but if something doesn't feel right when you meet someone, trust it, because your brain can see these little nuances subconsciously that you're not even consciously aware of. And you should every time I've not trusted that, I've regretted it. Same with you, Mark?
Yeah, absolutely. And my wife is much more attuned to that. So
women are. It's a sex. That's not a sexist thing. Yeah. But
when we do due diligence, I focus on numbers. She focuses much more on the people and what is the words coming out of the mouth, and does it support what I'm seeing on the paper, and what's their integrity and values, and not just, hey, here's the track record, but does the track record speak to what you're hearing the sponsors say? And feeling. I know that sounds foofy, but I'm just telling you, right? If your stomach's like, this doesn't feel right, trust it. But so what do you do to maintain the relationship with your existing investors? What sorts of things do you do? I mean, some of this is common sense, but let's do a little micro. I mean, what sorts of things do you do to maintain? Do you do phone calls or what sorts of things? I mean, you want to get on a regular pattern of communication with your clients, right? So whether that's putting out a newsletter, whether that's giving them a call every quarter, and it depends on the client. Some people just want to get an email. Some people want to get a piece of paper in the mail once a year that says, what you've been doing over the last year. So you kind of got to be in tune a little bit to your investors. And maybe there's a little bit of all of that mixed up so that it doesn't get boring or it doesn't get lost in the spam filter. If it's email, making sure that you're out there on the blog, doing podcasts, right? Promoting that on places like LinkedIn and Instagram and things like that. So you really need to have kind of a shotgun approach of not only maintaining relationships and feeding valuable information to your clients, right? Yep. You don't want to just be sending an email that says hi. Right. Keep thinking of me. You need to produce value, because if you're not, they're not even going to open your information.
Right. Yeah, I actually just approved an email to go out to our investor database, which just talks about what's happening with inflation and, the market
Exactly.
and so on and so forth. And people like to see that. They like someone that'll compile, some general economic information and present it to them in a way that they can digest it without,
Exactly. And those are the things that I love to do, which is why I write them. In fact, I didn't even intend to raise capital at first. I just decided to write an email, and then I kept writing them because it was kind of cathartic to myself.
Okay.
Just doing an update. Here's my view on what's going on with the economy and inflation and all of that sort of thing. And it started to become, read, and I got feedback that, hey, this is valuable. Keep doing it. Because I was unsure at the beginning, but hearing that feedback from your clients that it is valuable, it goes a long ways.
Yeah, very cool. Yeah, no, it absolutely does, and makes it worthwhile. I'm in the midst of creating a course, which this is the first time I've mentioned it publicly, on really building a brand using social media, and it's really going to be comprehensive on all the different social media ways to build. In fact, like my team got me on TikTok. I couldn't even spell TikTok 90 days ago. And I've had videos with 600,000-700,000 views. It's just astounding what's available. And, and that's a medium that you can use to add value, educate, and then, let them know when you've got if they're accredited, let them know when you've got a deal, publicly like that. Well, listen, I really appreciate you coming on the show. You're definitely, very knowledgeable about the business. So, is it you and your wife? Is that the team, or are there some other people involved? Or
yeah, we have some part-time support that does things like help us, improve our copy and blogs and that sort of thing, right? You've got a back team, I'm sure, helping you, like you said, on the TikToks and Instagrams and all of that sort of thing. We're not quite big enough to have a big team, but we have some support in behind us. So as we grow, I do hope to bring on additional team members to help underwriting and vet, operators and that sort of thing.
Sure.
But right now it is the two of us with some back support.
Very nice. Very nice. Well, last question I'll have for you is, I have a lot of let me rephrase that. I have a lot of aspiring multifamily investors. They want to be active and maybe start passively, but want to be active for sure and do their own deals. What advice, because you've done them, I know you've done syndications, you've got the mobile home parks and some of these other things that you've done. What advice would you give somebody that's maybe like you, introverted, analytical, needs to check off every freaking box before they make a move? You know who you are.
I am that person. I'm a perfectionist, right? I want to see everything buttoned up and checked off before I go forward.
Which is fear, by the way. Perfectionism is fear of taking action in most cases.
It really is. Yeah. There is no doubt about that. So you do eventually have to just get over it and go. 80-20 rule is very important to keep in your mind, not only on due diligence, but on your own getting stuff done list, right? Yeah. So that's one way. I think getting back to your question around what would I tell someone that's like me that really wants to get into multifamily, and I would say, take it easy, because I was that person. Like I said, I am a busy professional that has a good day job, that has a good salary. It pays well. And investing passively allows me to continue doing what I do in my day job. I like it, right? I like being a CFO, but I know that I want to be an active passive investor, if that's what you want to call it. Right. Full time. Right. But you need to recognize when you're going down the syndication route that you're building yourself a new job, a new career. It is not a passive endeavor, right? So you need to be able to value your time, and is your time in building that worth, more than what you're giving up in your day job, or would it be better to continue to be a passive investor, maybe for 5 or 10 years until you're ready to really step away, learn the ropes, maybe do some partnerships, that sort of thing. Because you may be giving up something that you won't get a lot of returns in the syndication business for 5 or 10 years. Because as you know, it takes a while to build that portfolio, to get up the management fees, to get syndication fees. All of those things take some time to really start to roll to replace your income.
I'll push back on you a little bit, only because I've got
Sure.
students that have done it in 2 or 3 years, retired from very high paying, jobs. It just depends on what you want, honestly. And certainly passively is a great way to start for a lot of reasons. You get to see behind the scenes. There's only so much I can teach at my 3-day boot camps, and you'll see some of the behind the scenes stuff. You can put it on your quote unquote resume that you're invested in, so many doors even if it's passively, it counts for something. And it's a great way to dip your toe in the water and ease into the business for sure. But again, I really meant the question towards people that are wanting to be active, and yes, you can start passively and certainly can. But if you want to be active, the bottom line is, like Nike says, just do it. It's not like, should I wait to buy real estate? No, it's buy real estate and wait. And so, and right now, more than ever with inflation, what it is, I'm sure you agree, there's no better investment than frankly, any real estate right now.
Sure. Inflation protected, like you said. I think if you're a new, a person evaluating whether they're coming into real estate, and you've already made that mental switch, I am leaving my day job. I think you're already going down that route. I would, not only start with a couple passive, but probably find that partner that matches your, weaknesses and can fill in the spots. Because like you mentioned, it's a team sport. You can't do everything, especially in this business. There's a lot of moving parts from lenders, marketing, underwriting, et cetera, especially in a very competitive environment right now where there are many other people like you trying to get out there. So find that person that fits with your skill set. You mentioned partnerships being very challenging. You want to make sure that is the right partner and the right fit.
Yeah.
Before you
you date before you get married. You say, let's do a deal together. And if it goes well and everybody does what they say they're going to do, and you can see the work ethic and the integrity and everything else, then you may do more. Don't get married and say you're going to do this together forever. And that's what I tell my students as well. But no, you're
very
absolutely
valuable
right.
Advice right there.
Yeah. Well, listen, very much a pleasure to meet you, Mark. I appreciate you being on the show, and I want to wish you continued success and good luck in everything you do.
Thank you very much, Rod. Very happy to be here.
Thanks. Take care.
Rod, I know a lot of our listeners are wanting to take their multifamily investing business to the next level. Now, I know you've been hard at work helping our Warrior students do just that using our ACT methodology, which is awareness, close, and transform. Can you explain to the listeners how they can get our help?
You bet. Guys, we've been going nonstop for 3 years, building an amazing community of like-minded people. And our coaching students, which we call our warriors, have had extraordinary results. They've purchased thousands and thousands of units. And last year we did over 1,000 units with our students. And we're looking to grow this group and take it to the next level. We're looking for people who want to follow a proven framework that's really step by step, and then leverage our systems and network to raise equity, to find and close deals, and to build partnerships nationwide. Now, our warrior community is finding success in any market cycle. So if you're interested in finding out more about how you can become more of our incredible network and take advantage of the incredible opportunities that are coming very soon, apply to work with us at mentorwithrod.com or text CRUSH to 72345, and we'll set up a call so you can check us out and we can check you out. That's mentorwithrod.com or text